Welcome back. The latest interest rate hike will choke your already tight purse strings. It means loan repayments took a massive jump.
Well, but the Reserve Bank maintains it's the only way to prevent runaway inflation. It's hoped the 75% or 75 basis points increase will help get it back to the target of between 3 and 6%. So let's get some advice now on how to manage the little to no money we have with the Thuli Magubane from Mint Fresh Advisory Services. Thank you so much, Thuli, for your time this morning. I mean, to even talk about the 75 basis points increase when it comes to the interest rate, and at the back of that, as we're talking to even Kosatu, was that we've got to deal with the inflation that is at a 13-year high. We have to deal and contend with fuel prices that are it's exorbitant at this moment in time. South Africans are still trying to recover from a COVID-19 pandemic that had them under lockdown, and subsequent job losses were experienced as that. Can we actually afford this 75 basis points increase in interest rates?
Good morning, Faith and Morena, and to the viewers. It's a mess. I think that's the best way to describe it right now. There's a lot going on. As you mentioned, I mean, we're still just trying to recover from the impact of COVID-19 and the lockdown. And of course, we've had the war in Ukraine, which has taken the oil price at one of the highest highs we've had. And obviously the fuel prices have gone up, and it's one of the drivers of having inflation beyond our 36% rate. And I think this is the first time in 13 years that we've had inflation coming in at 7.4%. So for 13 years, government has managed to keep the inflation within the target range of 3 to 6%. But because it's gone out of the range, I mean, we're still better off. The US had their inflation coming in at 9.2%. So this is a country that has very low inflation. So if you're used to inflation of 2 or 3%, coming in at 9%, you can imagine consumers are reeling from that. And I think it's the same in South Africa. People are crying because, you know, the banks, they're always very sneaky. As soon as the interest rates go up, your repayments go up immediately. I received a letter, I think just yesterday, saying that my bond is going up. So when interest rates go down, the banks will keep your rate the same for one extra month and only take it down the following month. So everyone who has some form of debt is crying right now because all your repayments have gone up. So imagine the average South African has got a car, you've got a bond, you've got a credit card, you've got some kind of personal loan. And so really everyone is stretched at this point. So in terms of what to do, some tips, because everyone is trying to figure out how to stretch the rand, how to make sure that they survive to the next paycheck. So first of all, I would advise people to consolidate their debt. Debt consolidation is actually a good way of trying to reduce your debt installments. So what you would do is approach a company that does debt consolidation, and then they'll take all your debt, put it together, and give you a new loan. So basically they'll pay off whatever current debt you have, and then you only have one installment which you'll repay with that particular company that gives you the debt consolidation. And it's really better to do it now before you start defaulting. And I think we've seen a lot of South Africans already defaulting on their debt. So if you haven't reached that, it's actually a good time to actually look at debt consolidation to make sure that you've got a bit of a breather. Another thing that you could do is actually approach your credit providers and try to rearrange your debt repayment period. So for example, on average, car repayments are 60 months. You could try and extend the period perhaps by another 6 or 12 months. Yes, over the long term, you'll be paying more interest on that loan, but it will definitely reduce your monthly installment. So that's something else that you can do. But on a practical sense, you know, it's not easy. Sometimes you just need to look at downgrading. And I know, and especially young professionals, when you're on the come up, it's very hard to say, I have to give up that one series, I have to give up the flat incentive, and try and see what you can do. Buy a smaller car, move back home, or maybe even get a roommate. So it's really about trying to share the cost as much as possible. And if you do have a house and you have an extra room, you can consider subletting, ustumo. We all grew up having ustumo either in the back room or at home. So look at that. Find ways that you can sublet your property and make the extra income that can actually assist you in trying to get extra income every month. And then lastly, try and find ways that you can make extra income. There's a number of side hustles that you could look at. Go online and find, and especially online, I mean, you can find a lot of side hustles that can actually enable you to earn extra cash.
Thuli, I'm glad that you've already leapt into the what can South Africans do to ensure that they survive, what's been thrown at them by Ndate Korongwana, Kwedemantashe, Cyril Ramaphosa. He's the man at the top of it all, throwing all of these things at South Africans. But there is a very popular radio personality who is known for a saying that says, which essentially says we don't get paid very well. So I'm hearing Thuli Magubane, who is a finance expert, who knows how to throw tips around as to how it is I can manage my money. But you are telling me to manage money I don't even have. So what exactly are you saying to me? How do I go about managing money I don't even have? We are not being paid well enough, and yet we must still be able to save. We must still be able to, put money aside for retirement annuity, for the funeral policy, and. How do I manage very well money I'm not even getting?
As you mentioned in the intro of the segment, I think, there's no way to tighten the belt anymore. I think we've reached the last hole. I think after this, we'll literally be hanging ourselves. And people are also trying to recover during the COVID period that we've just been through. Some people had their salaries reduced so that they could keep their jobs. So it was really tough. So as I mentioned, that try and find ways of getting additional income. And I mean, a lot of people rely on just one source of income. And to be wise, you need to have 7 streams of income, but that's another conversation. So look at ways that you can get extra income. I think it's gone to that. Companies are stretched as well. It's very difficult to get those salary increases. And if you do, it might be within the previous, inflation rate, somewhere between 3 to 6%. If you're lucky to get, that salary increase, which means it's even lower than inflation. So for me, as I said, try and find ways to get extra income, share expenses at home, move in with a friend, move in with the sibling, and try and consolidate your costs so that you're sharing those costs. It's very expensive these days to be living alone. So find ways that you can get a buddy or somebody else to share those expenses with you. And then, as I said, look at practical ways of trying to downgrade your lifestyle. Buy a smaller car, so trade in your big car. And if it's a big car, it's probably a fuel guzzler as well. So buy a smaller, a fuel-efficient vehicle. And if you can, even sell that vehicle, work from home. And if you do need to get around, use an Uber. And if you can share your Uber costs with a friend, when you're going out, it's even better. So right now, everyone needs to look at ways of trying to share the burden. I think that's one way that we can get through this as South Africans. Let's share the burden, even families. I know it's tough for people. Black tax is real. And you need to also just speak to your family members. Let them know that things are tough.
Yeah, very true, very true. And we have to leave it there, unfortunately. Thuli Magubane, thank you so much for your insights this morning.